Hi, everybody. This is Patrick Zielbauer. It is Monday, March 5th, 3:30 p.m. Central Time. Thanks, everybody, for coming. Let's go through some risk stuff real quick, and then we will get into it. Trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. So folks, only fund a futures account with risk capital, okay? That means money you can afford to risk or lose potentially without lengthening your retirement horizon or affecting your ability to maintain your lifestyle and so on, okay? You're unlikely to make good decisions if you're depositing funds into the account that you can't honestly consider to be risk capital, okay? So please bear that in mind. Please also be conscious about the use of things like day trade margin. You know that we have a lot of flexibility when it comes to day trade margin. A lot of our clients and prospective clients know this, but definitely use day margin gingerly. I mean, even if you use overnight margin per contract, you're still using leverage. There are situations where access to day trade margin could be really useful. That's the reason why we offer day trade margin, and we have the ability to be flexible. We've got the infrastructure and the personnel and the procedures to do that. So we do want to remain competitive, but we also want people to be reasonable with the leverage. And if you want to have a discussion with us about what this means or if it's appropriate for you or not, we're certainly happy to have that discussion with you on an individualized basis. We're all NFA members and registered. We can do that, okay? So please don't be afraid to have a discussion with us that focuses on risk or these concepts, all right? My name is Patrick Zielbauer, and I'm an AP or associated person of Infinity. I've been working here for a long time, about 14 years going on, I think. And in that time, as most of you know, Infinity has worked with a variety of different third-party platforms and charting services and data feeds and order entry schemes and so on. And really, we have really focused on Infinity AT for order execution and Sierra for charting. So there's basically three parts to our service for those of you who are unfamiliar with Infinity. One part is our data. Okay, we have our own data feed. Secondly is the trading platform, Infinity AT for order execution, and then thirdly for charts. So the reason why we make a big deal about our use of Sierra is that we believe it's a phenomenal program, and we sort of attached our cart to this horse a long time ago, long before anybody else really did. And we believe that Sierra is a phenomenal application that is dramatically improving year over year, and we do intend to continue to expand our support for it. One of the nice parts about using Sierra for Infinity users is that we waive our fee for it if you do a little bit of trading. Okay, 10 round turns every 30 days waives the $20 fee we would otherwise charge. So that's still less money than what level 5, which is the highest level of Sierra, would cost if you were to go to Sierra directly to buy it from them and lease it with them and, for example, pay them with a credit card. So here at Infinity, you can get Sierra with the profile and the numbers bars and all the highest level stuff, but you still get good support from Infinity for the charts, and there's a possibility you're not paying for it anyway if you're doing even a tiny bit of trading. So that is sort of how it fits into our offering, from a sales perspective. So if you have any questions about pricing or things like that, feel free to ask, and maybe we'll cover that near the end of the presentation. All right. So for those of you who are new to these events, typically what we do is we are trying to focus on some unique concepts that exist within Sierra. So we will do other events. In fact, I'll mention this now while I've got everybody's attention. Is tomorrow we'll be giving a presentation. It's basically available for anybody who's already a live customer. So if you're interested in attending, it's going to be called Tips and Tricks for Infinity customers. And if you're here and you'd like to attend, let your rep know, and we'll get a link over to you that you can sign up. But it's really for clients only. And feel free to register for that. That one will be a little bit more basic, so a lot of you will not need it. Okay, it's going to be a little bit remedial, compared to things like what we cover here today. All right. So for those of you curious, we do these presentations. We talk about unique aspects of the charts. We try to cover some, intermediate to advanced level stuff. I'm not a programmer by trade and by any stretch of the imagination, but one of the things I like to demonstrate is that it's possible in Sierra to do some really neat things without being a developer, without being a programmer. It's one of the reasons I really like this program, is that it satisfies the basic needs of a regular person who just wants a 5-minute chart up there, and it also can satisfy the needs of someone who's looking to do automated trading or overlays and charts referencing each other and all kinds of stuff. You can do a lot of that without having to learn, C++ or C# or something like that. So that's really why we do these presentations. It's a good example of, or to provide good examples of how you can use this program to its full, capacity. Okay. So that's our little, spiel as to why. So the schedule for these sorts of presentations, this one's really, really short. Okay. This is the schedule for today, March 5th. I'd like to go through a couple of brief examples, and then I'd like to take some Q&A. And I did get some examples from people last week who were looking for, things we could go over, but actually not that much. So I feel like there's a little bit of groupthink here where everybody thinks that someone else is going to send a suggestion in, so they don't send anything in. So no one sends anything in. We had a few questions come through that I'll cover, including some of the stuff that I'll show here in a minute. But what I'd like to do is a couple of examples of what we're doing and how somebody who is, trading these markets on an intraday basis could make use of Sierra. All right, so I'm going to keep this open, but on the other screen, because we're going to use it as a notepad in a little bit as we get into the examples. Okay. So what we see on the screen right now are two 5-minute charts. One of them is the NASDAQ, one of them is the E-mini S&P. In fact, let's make a match. So on the right side here, I'm going to change this to an S&P chart. It's going to reload. And basically what we've got on the screen right now is Heikin Ashi smoothed, okay, at the bottom. And then it's just a 5-minute candle, and you'll see some colors in the background. So this was an example that had been brought to me via email, and the customer was looking for a way to be visually notified and potentially taking a trade when the Heikin Ashi goes from like negative to positive or positive to negative. And so inside this program, what I'd like everybody who, especially for those of you who are unfamiliar with it, what we're going through here is we're going through an exercise where we begin to inventory the decision-making process. So we're starting to think, okay, what are the conditions that normally need to occur before I decide that I want to get in or out of a trade? And how can this program help me display something or make a sound or something when those conditions are true? The objective for those of you who are newer to these events is to clean up the screen and prevent you from having to look in 5 different places on a very short time frame when you're deciding to get into a trade. Now, it doesn't mean you have to use the automated trading capability that exists within Sierra, but it sure would be nice, I think most people would agree, if the charts could notify you when conditions that you typically look for that result in a new position or exiting an existing position come together without you having to look at all 5 or 6 of those filters individually on a rapid fire basis. So what we're trying to do is show you in this program how you can display a visual or audible notification when a certain condition is true. And then furthermore, we'll give an example of how you can make that actionable and trade on it. And I'll show you a couple of pretty neat, examples that were done in a simulator over the last week or so, and some of them worked out and some of them didn't, but we'll be nice and even-handed about it and give you some good examples. All right. All right. So a couple of questions that came through that I'd like to cover before we even get started is one of them was about reversals. So this particular study in its current format does not support reversals. Okay, you can put 2 separate entry conditions, like you could say there's an entry condition that exists here, and then you could put like a buy entry condition that exists here, and then also a sell entry condition that has the same conditions. But you got to be careful with that because this study does a position check before it fires. And what that basically means is that if you're in a position, it's not going to take a new position. So if you have 2 different conditions, like one of them is a buy entry or a buy exit, and then an opposing one is the same condition except it's a sell or a sell entry or a sell exit, you can end up in a situation where the reversal is not taken because you actually haven't gotten out of the trade yet, according to the charts. Now this can all happen in less than a second. It could be quick, but there could be situations where a reversal that you intended to occur would not happen, and for that reason, I'm gonna err to the side of caution and say don't use reversals for now. Okay. All right. A couple other questions that came through. Paul, you had a question about how to do a volume SMA 10 period. I'll see if I can touch on that. I mean, if you have a condition, Paul, like based upon that, or if you just want to see a moving average of the volume, that's really easy. We'll get to that one in a bit. James, we don't do EAs. So EA is a reference to Expert Advisors and MetaTrader 4, which is a popular FX platform. We don't offer EAs that are compatible here, but you can write your own entries or your own conditions or have someone write them for you or something like that, and they can be imported. Okay. All right. So what we're going to do here is show you how you can get this visual behavior. You can very clearly see that the blue background on this left side is coinciding with these positive green bars, and then the red background is coinciding with these negative red bars here on the Heiken Ashi smooth study. So let's show you how you can achieve a similar look. All right, we'll kind of go through it from scratch, and then I'll explain how we go from there to the chart on the right side, which is obviously showing a little bit less coloring, and then we'll also show some other examples and do some examples of the actual trades. All right, so the first thing that you need to be able to do when you are looking at a study on our charts is you have to be able to know what the ID number is. So when you're building these sorts of visual notifications or trading systems, you've got to be able to break down the ID number of the study and the subgraph that you're referring to. So a subgraph is referred to here as SG1, SG2, SG3, SG4. Each one of these is a subgraph of study ID number 1, which is the Heiken Ashi smooth. So sometimes when I'm doing this, I'll bring my notepad over and I'll start making notes. So I'll say, okay, like in this example, I'm looking for, and I'll tell you exactly what I'm looking for, but we're looking mainly at the at ID1, and then we have subgraph 1, which is the open. All right, and I'll just repeat this here. Oops, excuse me. Subgraph 2, which is going to be the high. Subgraph 3, which is the low. And then subgraph 4, which is the close. Or if it's an open bar, if it's the current bar, it'll be the last price. So the close, when you hear the word close in Sierra, that always refers to the closing price of the bar, or if we're on the current bar, it's the current price. All right. So in this example, and you'll see in others, there's going to be situations where there's lots of subgraphs, but you might not care about them all. So you're going to be able to look at these and say, okay, which one of these are relevant to what I'm doing? And then the other ones you can forget about. So in this example, what I wanted to do is I wanted to be notified when the candle is a positive candle, which, like with Heiken Ashi or really any other candle, that means when the current price, is greater than the opening price. All right, so if you start to think of, a lot of times when you go through the process of building these studies, you have to spell out in English what you're looking for first, and then you can go back and write the code out in this this really easy to learn sort of Boolean like format. And here's what the first study looks like. So I added a study here called color background based on alert condition. All right, so color background based on alert condition is the name of the study that we're going to add. You'll see it in the list here. All right, so I added one instance of it. And if we look at the settings, we can pick a color. Okay, what color do we want the background when this condition that we're about to look at is true? Okay, it's just like this. We just go to the alerts and you say, there's our condition. Well, it's not really that complicated. This is an easy one. Okay, so when we're looking at our little operators here, we basically want to know when the close is greater than the open. That indicates a positive bar. So when you write that code out, all you're basically doing is referring to the subgraph itself by saying, okay, when the close, which is ID1.SG4, is greater than the open, which is ID1.SG1, that's our condition. Now sometimes these conditions get long, and you'll look at them and you'll say, wow, how did this person think of this condition, or how did they manage to type all that code out? You really don't do it just in one streak. What you do is you do it piece by piece like we're doing here. We'll go through some other examples. In fact, the chart on the right will provide us another example of how we can go through that process. So for this specific example, it's really easy. ID1.SG4 is greater than ID1.SG1. That yields our blue background. That implies that the closing price of the bar is greater than the open. All right. Now the next one we're looking at here, color background based on alert condition. What I did is I just duplicated that study. So I just hit the duplicate button. It made me another one. And then we're just reversing it. Okay, now we're looking at ID1.SG4, which is the closing or the last price, is less than ID1.SG1, the opening price. Therefore, we have a negative candle, and I just picked a different color. So these two conditions are being displayed on the chart in the form of this color background. If all you need to know is the condition itself and you don't really necessarily care about the trend that you're seeing here, you can always go to the studies window and hide the study that is actually generating the signal. In this case, it's the Heikin Ashi. All right, so it might look something like this. So if somebody knows that they wrote that code in here and they know what the red and the blue mean, you might agree with me when I say that having lots of extra stuff on the chart just contributes to decision fatigue and is usually costly. All right, decision fatigue is a real thing. I believe it exists. I think it comes to the forefront in trading a lot earlier in the day than it does in lots of other industries or occupations. And basically decision fatigue, for those of you who are unfamiliar, is the idea that you can only do so much quality decision making in a day. And oftentimes in trading, we have so much data. We've got TV, we've got our buddies online, we've got the trading rooms, videos we watched the night before, 20 different time frames, 15 different markets. It's tough to deal with it all. So this is basically an effort to sort of whittle down the amount of information you are looking at. There might be situations where it is perfectly valid that you need to see the line. You actually need to see the line, but there's plenty of situations where you only need to see the result. You don't necessarily need all this extra stuff. All right, it doesn't seem like a big deal, but again, when you're looking at 20 different markets and 5 different intraday time frames, et cetera, it adds up. All right. Okay. All right, so this is one example. Now, what I would like to do is go from this example to the one on the right, and you can see that it's very similar, but the difference is that we're really only seeing the notification when the direction of this changes. So we're not getting the same color background for the entire time. We're only getting it when it goes from positive to negative or negative to positive. So how do we do something like that? So this is a really good example of how in Sierra you can use just logic to write a code that's really, really easy and really just builds off what we've already done. All right, so inside Sierra, you have several operators like and, or, and a couple of others. And if you look at this, like I said on the other one, it's a lot simpler. If you look at this and it's intimidating, don't be intimidated by it, because really this is just two pieces that are put together. So here's our first code. This one's going to look familiar. Okay, this is our last price or closing price is greater than subgraph 1, which is the open price. So therefore, we've got a positive candle. All right, then what we did is I separated this by a comma, and I wrote another code that basically said the closing price 1 bar ago had to be less than the opening price 1 bar ago. Therefore, we had a negative bar in the prior bar. So what we're basically saying here is that the current bar is positive, but the prior bar was negative. Therefore, a reversal has occurred. So sometimes when you are looking for an end result, you can back your way into the formula this way. And this -1 is how you refer to the same study, except 1 bar ago in history. So what this again is saying here is ID number 1, SG4, which is the closing price 1 bar ago, is less than the open price 1 bar ago. And we combine those two things together, separate them by a comma, and just put it in one giant parentheses with the word and in front. And that means that everything inside the parentheses has to be true in order for the condition to be true. If we had an or at the front, it means that anything inside the parentheses, if true, makes the entire condition true. So if you have a situation where everything needs to be true in order for the condition to fire, you would use the operator and in the front. If you are looking at a situation where anything inside there, if true, makes the entire condition true and you want to be notified, then you would use or at the front. And there's a listing of all these operators on Sierra's website, and I'll make sure to post the link here for everybody in a few. So this concept of what is happening in the current bar versus what is happening 1 bar ago, this is a really common way in this program to look at things like reversals in any study. It doesn't have to be the Heikin Ashi. It could be the price itself. It could be the direction of the stochastic, the CCI. I mean, anything where you want to see a change in direction, this is a really, really common way to do it. So you've got one condition that's current where one value is greater than the other, but in the prior bar, the other value was less than, one value was less than the other. Because both of these things have to be true, it implies a reversal. All right? Okay, so hopefully that's useful. Now there are some. There are a couple other examples I want to give before we go into making these into a trading system. But there were a couple of the questions that came through. Okay. Raj Kumar asked, is it possible for a 2-minute chart to be inverted? Is it in a downtrending market? I prefer the chart is inverted so the chart is visible and trending high. It makes my entries easy, even though it's a downtrending market. That's a good question. Maybe you could try the study called 1 divided by price. I'm not sure of a way to do that. I mean, there's a study called 1 divided by price. I think it's actually the first study in the list. So let me just open up a new chart book real quick. Yeah, I'm not sure about this one. So this is a 5-minute chart. I'm going to put this in region 2. So this is a 5-minute chart, Raj Kumar, with 1 divided by price added. I suppose that would be one way to do it. There's probably a few other ways to do it as well. But yeah, that might be one way to do that. There are a couple other people saying there's some other ways to do it too, but I'm not quite sure. Okay, we'll come back to that one if some of these other people chime in with some answers, okay? Thank you. That's a good question. It's not the first time I've heard that. I've heard it a few times. Okay. Al says, go to chart settings, tab 3, real-time and historical data set to -1. So here's how we might do that. Let's just get rid of this study. Let's see if we can replicate that. So chart settings, advanced settings 3, real-time and historical data set to -1. I don't even see that on here. Okay, well, I guess we'll come back to that one, okay? I'm not sure. We'll come back to that one. Okay, Paul had a question or an example that I think might be useful for the average person. So if you go, what Paul was asking is an alert that changes the background when the volume is 1.5 times the average of the last 10 bars. Okay, so Paul's saying I did this by hand. I added 10 bars, I divided by 10 compared to the latest bar, and then triggers the alert. So what we're going to try to do here is follow along with what Paul is looking for, because I think this is something that most people could grasp. And basically the concept is you're looking for a spike in volume compared to history, and recent history at that. All right, so let's actually use that as an example. So I'm going to look at the S&P here. This is a 5-minute chart, and let's go ahead and add the volume. Okay, so I'm just going to add volume at the bottom. There it is. Let's go to a shorter time frame here, just so we can try to get some more frequent signals possibly. So obviously this spike in volume is right at the, it's right at the close. All right. So now what we need to do, what Paul's saying is I want to look for an alert that changes the background when the volume is 1.5 times the average of the last 10 volume bars. So what we first need to do is get a moving average up. So let's get a moving average. But unlike a regular moving average, we are not going to do this moving average based on the main price graph, which is the default. We're going to do the moving average based on volume. So in the vast majority of cases, when you come into the settings section, this is going to say based on main price graph. In this case, we're going to change it to volume. And then for the input data, we're going to choose volume as the input. We're lucky with volume because there's only one input here. When you're looking at something based on something else, a lot of times you have other choices. You need to make sure you choose the right input. So here we're going to do volume, length of 10, and then we're going to put this in region 2, okay, which is the same region where the volume is actually located. So I'll get that added, and we can see it's a little faint, but we can see it here. Okay. All right. Sorry if you guys can hear my dog in the background. He's in the office with me from time to time. All right, so what I'll do is make this a little bit more pronounced. So there's a little bit of a thicker line, put the value label up there. And so now we can easily see the moving average, a 10-period moving average of the volume. All right. So what the condition that Paul is looking for is he wants to know when the volume is 1.5 times this value. Okay, so we need to build an alert condition when the volume is greater than 1.5 times this value. So here's how we would do that. We'll go ahead and go to color background based on alert condition, like this. Okay, and let's just make it light green here so we can easily see it. Actually, that wouldn't make sense because that's the same color as the bars. So let's just do a different color, like that. And what we need to do is make an inventory here of each of our subgraphs. So the first thing is the volume is what we're actually looking for. So we want to know when the volume of the current bar is greater than that value times 1.5. So firstly, we go to settings, and luckily, as I mentioned, volume only has one subgraph, and it's going to be ID1, SG1. Okay, so ID1, SG1. That's our volume. The moving average is going to be ID2.SG1. So that's this blue line right here. So what we want to know is we want to know when the volume, which is ID1.SG1, is greater than 1.5 times this value, ID2.SG1. So here's how the alert looks. Go to color background based on alert condition and go to alerts. And we're just going to say ID1.SG1, which is the volume itself, is greater than ID2.SG1, which is the moving average, times 1.5. And then we're going to get this behavior. So this is an example of how you might go through this. Now you might see that there are situations like this where you get too many signals, or maybe the threshold is not quite high enough. You can always come back in here and change it. So if we want to make this value 2.5 times, Paul, you would just go in here, change it to 2.5, and reapply it, and you'll see that you get significantly less output. So this is one way to do it. All right, so that's a pretty good example because a lot of people do trade strategies that are based around spikes in volume. This is a reasonable, way to have that data displayed in a concise format that doesn't require you to do that much. And again, just like we said before, if you want to get rid of or hide the originating studies, feel free to get rid of them. All right, so you're looking at the chart and you know that your magenta background is there when you get a volume spike. If you don't actually care about the volume number itself, which you probably don't, then this is a good way to clean up the chart a little bit. And again, we're trying to work through the idea here that you might have 3, 4, or 5 filters. It doesn't only have to be one filter. So you really have the potential to reduce the amount of noise on the screen if you're so inclined to do that. All right, so I'll leave these visible here for now again, but that's a good example. And again, one thing I failed to mention earlier is that if anybody wants a copy of the file or any of the files we go through here today, please feel free to send an email to your rep in our office, and I will make sure to get them to you. All right, so you can use them. You can work backwards off of them. You can use them in conjunction with the recording that we're going to post on YouTube, whatever you prefer. Okay. All right, so hopefully, that's a very good example. I appreciate you throwing that out there, Paul. All right. Now, when you start to develop a condition like this that is starting to yield, that most closely resembles when you're actually going to get into a position, that is the point where you may want to start considering automating it to some degree. So who would be a good fit for someone who is looking to automate these trades? It could be for somebody who's trading a strategy that they freeze up and they can't take the trade themselves because they're questioning the system or themselves, or you're trying to convince yourself to not take the trade. It could be for someone who's trading a market like crude or the NASDAQ or gold, where if you miss the trade by 3 or 5 seconds or something, that it's probably already gone. Or it could be for someone who wants the ability, to very easily toggle on and off whether or not these trades are being fired on their own or not. So if you are the type of trader where you just want to be led up to the decision point and then you want to take it from there, then the color background study is probably as far as you need to go. You can put all your conditions and all your filters in, and then when you see the alert, you can make a decision. Hopefully a lot of the work is done for you by the time you get there. The rest of it is intuitive function. All right, if you are missing trades because of any of these examples, then you may want to go a little bit further and consider using the trading system based on alert condition study. So trading system based on alert condition is just another study that you can add to the chart. All right, if we just right click and go to studies here, all right, you actually just go down and add another study called trading system based on alert condition, like this. The beauty of using trading system based on alert condition is that it uses the same logic as color background based on. So once you have your color background working, you could just copy the text and paste it into here, and it'll work the same way. All right, so let's use this this chart on the right-hand side as an example of some of this. So before we actually do that, I'm going to duplicate this chart and then tile them on the screen because I want to have a progression going from left to right. So this is our first one, this is our second one, and then this one over here is the one we will base our trades on. Okay. All right, so we'll go to studies, and we're going to add that study trading system based on alert condition. All right, I like to use the move down so it's at the bottom of the list. So again, we've already got the code. So what we're basically telling this thing to do is we want to know, we want to take a long trade when this reversal occurs, when this downtrend appears to have ended. And the way that we can do that is by adding the study, and then let's copy our text from our entry signal like this, and then we're going to paste it into the trading system based on alert condition section. Now, there are some definite things to consider as you do this. Okay, don't expect to just put the code in here and then hit apply and OK and walk away. Okay, we really need to make sure that these settings are set properly. There are more inputs when it comes to trades than there are if you're just doing the color background. We're going to go through each one of these and then go from there. So firstly, is it enabled in the first place? The answer is yes, I would like it to be enabled. So that's going to default to no. Number of bars to calculate, that defaults to 2000, just like the color bar based on study defaults to 2000. I don't really have a good reason to reduce or increase this number. If you put 10 or 15,000 in there, it's probably a little bit more processing power that's weighing on the device, but 2000 is enough for most. The order action on alert, this is going to be a buy entry. So a buy entry is an entry to get long. A buy exit is a sell order to get out of your long. So that's not very intuitive, but that's the way it is for now. So if you're getting into the market long, you're using buy entry. And then if you want to create a second condition to exit, that's buy exit, okay, not sell exit. All right, so you have to make sure you're getting that right. So again, if you're going along the market to get into a trade, that's buy entry. And then if you're creating a separate condition to exit the market, that would be a buy exit. All right, in this case, I don't think I'm going to do that, but I'll leave this at buy entry. All right, evaluate on bar close only. This is a big one for a system like this that is really looking at the direction of the bars, not just like an indicator. Sometimes when people are looking at volume spikes and they're looking at regular oscillators and so on, when that line crosses some other line, they want to go. Okay, you want to go right away. But if you are basing a study based on something closing above another level or closing positive, you may want to consider leaving evaluate on bar close only set to yes. That's not something I typically do. A lot of the systems that I've played around with and practiced with, I've turned this off because I want the signal to go the moment the condition is true because it's really, really time sensitive. It's also true that in those cases, my studies were not based on something closing above or below something else. I just wanted to know if they had crossed the line already. So that's going to be dependent on your system. If you want to fire off right away as soon as the condition is true the first time, leave this at no. If you want to wait until the bar closes for it to be evaluated, then put it to yes. Okay, this is the most important one here. Send trade orders to trade service. Okay, if this is set to no, that means that if you're connected to your live account or your simulated live account for that matter, and your signal fires, the signal will not be sent. This should be set to no at any time that you are practicing, doing replay, just fooling around with it. All right, anytime you want to actually go live, meaning you want to send orders to your live account or to your simulated live environment with Transact and Infinity, then you would change this to yes. Okay, if you leave this at no, it will not send an order to a live or a practice environment. So in this case, I'm going to go ahead and set this to yes, even though it's 4 o'clock in the afternoon and there's no way to take a trade, but we'll just do it anyway. The maximum position allowed, this defaults to 1. I just like to put it to 10 because I don't want to cause a position limit violation problem or something. Maximum long trades per day. I mean, I highly doubt this would probably take 100 trades in a day, but I suppose it would be dependent on the time frame you're choosing. Okay, if you're using a really short number of tick charts or really small, 1 minute chart or something, you might get more signals. So just make sure that you're not running into this as a problem and it's causing you to not take positions. Okay. Enable debugging output. Just leave this at no for now. You'll know if we instruct you to change this to yes, or if you are in touch with Sierra, if they are trying to help you solve a problem, you might want to have this set to yes. But for now, you can leave it at no. And then cancel all working orders on exit. This is basically like the equivalent of hitting cancel all in the DOM once you get out of a trade. This defaults to no. I'll just leave it at no for now. But if you want this the software to hit basically cancel any order in this market once you get out of a trade, just to make sure nothing else is out there, you can change this to yes. Okay, if you want to allow trading only during a certain time frame, you can use this function here. I'm not going to look at this for now, but if you want to only, this is only working between, say, 8:30 and 1500 hours, which would be 3 p.m. Central, which is when the New York stock market closes. That might be an example of, of what you might have here. If you're going to do that, though, make sure that you've got allow trading only during time range set to yes instead of no, which is the default. Okay. If you take one trade as a 3 lot, is that considered 1 or 3 trades per day? That would just be, 1 trade. All right. Okay, so this is an example of our condition. Now, subgraphs. Let's go to how this is going to be displayed on the screen. All right. Since this is a buy entry, the first thing you should do is go hide the sell. Okay. Basically, what this is, we want to hide any sell condition because the software puts them both on here. So whenever I'm doing a buy entry, I come in here and change the draw style on the sell side to hidden. That way it's not going to be displayed. And then as far as the draw style of the buy, my personal preference is to leave this as point on low. Okay, I think it's a little counterintuitive to have the point on the top of the bar, but maybe that's just my opinion. I'm not sure. So I'll just make this like a blue color, make it a little thicker so we can really see it. So I use point on low as my draw style for the buy because it just makes it very easy for me to see what's what. All right, so let's go ahead and apply this. And what you're going to see right away on the far right chart is our little point on low. So this is, we should expect this to happen on every candle, on every candle where there is a blue background because the conditions are essentially the same. It's just the visual output here is different. All right, so now we've got our condition here and it looks good. So what you would then do is go to the color background study for the sell and copy its text and then basically go through the same process. You can either duplicate the one you have and get ready to flip some things around. In fact, let's just do that. So I'll just duplicate this one. So it copies everything about it. I'm going to go replace the existing code with my new code, which is really just the inverse. And then we can make sure our colors and stuff look good. So in this case, we're doing a sell. So this buy section, I'm going to change this to hidden. The sell, I'm going to change this to point on high. Again, that's just my personal preference, and I'll just make it like a darker red here so it's very, very visible. And then in the settings and inputs here, the only thing we really need to change is the order action on alert, which is going to be a sell entry. So if we apply these changes, we should then get this behavior, which you can see we are getting here. By the way, the reason why these, I didn't really realize this, but the reason why we're getting the same behavior on the chart in the middle is that these charts are linked by study. I'm going to unlink them before I send them to you, but these charts are linked in a way where if I make a change to this one, it also makes the change to this one. That actually comes in handy a lot, but in this situation, it's annoying. So I'm actually I'll disable that before I send you the files. All right. So this is an example of how we might be able to create a system. So from here, there's certain things that you sort of have to ask yourself. One of those things is, how am I going to manage the exit? Am I going to do it myself? If you want to do it yourself using the trading platform, you're obviously welcome to do that. If you want to let the software handle it for you in a couple of different ways, you can also do that. One way to let the program handle this for you is to create another condition that represents a sell exit for a long trade, or a buy exit for a long trade, which would be you offsetting your long, or a sell exit for a short trade, which would be you offsetting your short. I'm going to do I'll do a video or something on an example of that. I'm not going to do it here because I want to try to appeal to the vast majority of people here who are just looking at this for the first time. But the most common way to manage these trades is to use the attached trade window, which you can add to the chart by going to the trade menu and going to attach trade window to chart. And when you do that, you get a window that looks like this, which basically affords you the ability to add brackets and stop losses and trailing stops and things to these trades once they fire. So really what is happening is you're letting the system get into the trade, and then you're letting your exit strategy manage the exit. You're not letting another signal manage the exit. You're letting the chart, the attached trade window, and any predefined parameters you have manage when you get flat. All right. So as an example of that, just like a super easy example, if you go to targets, it actually defaults to target of 10 and stop of 10. So I'm just going to I'll actually leave that in here for now. Okay, that's actually, well, that's a little tight for the S&P. Let's just make it 20 just for kicks. So I'm going to make a 20 tick target and a 20 tick stop. And then in the main tab, you can check this box here that says used attached orders. And if that is checked, then when you get filled, the brackets will go. And you'll see them on your trading dome. You'll see them on the charts. It should be very evident as to what your position is and where your targets are and your stop is. And also, you can easily manage your trade on your own. You can flatten, you can reverse the trade here if you want to, or you can let the stop or the target get hit. All right. Now, once you have a system in place like this where we have established some conditions, we have established a exit strategy, the next thing you might want to do is replay the chart just to see how it looks. Okay. Now, one thing that you need to do before you replay a chart is you need to go into the trading system, and this section here that says send trade orders to trade service, this has to say no. All right. Earlier today, I just told you to set this to yes if you want to trade live. One thing I mentioned is that if you're going into replay mode, the replay mode throws a wall down between the charting program and any of our execution server, whether it's live or simulated. If you want to be able to test this, those conditions have to agree. These have to be set to no, and when you go into replay mode, you're using a simulated environment where the orders never really leave Sierra. So if you want to use the replay successfully, it's really critical that send orders to trade service be set to no, and then when you're done, you got to go back in here and change them to yes. All right, so I've changed them both to no. And now what I'm going to do is scroll back in time to, let's do like this one here. So we'll go back a little bit. So this goes back to about 1:15 or so this afternoon. All right, and when you're here, you then go to the chart menu, and then you go to replay chart and select this replay chart control panel, and you're going to get this window that looks like this. All right, so you really don't have to change much from here. You might change the speed a little bit, but this is going to say it's going to replay all the charts in Chartbook. You also have the choice to just replay the single chart that we're on, which probably would use a little bit less memory, but I'll just leave it on the default. And then the replay mode, you can leave this on standard replay. There are some other choices in here that are pretty well documented on Sierra's website, but I'm not going to go into them just yet for time reasons. All right, so once you've got it all in place here, the speed represents the speed at which we're going to replay. So this is 30 times the real speed of a 5-minute bar. So I'm just going to push play. We're going to get a couple of warnings from the charts saying it's going to clear some historical simulated data and things. You have to let that happen. And what you'll notice is when you go into this replay mode, this kind of turns this like blue color. So that's how you know that we're in replay mode right now, is that you got this blue color here. And also it's going to say sim at the top up here. And actually it says replay at the top of the chart as well. So it's pretty easy to know that you're in the simulated environment. All right. So right now what's happening is you can see the market, it was rallying, and we should not see a trade happen until the Heikin Ashi turns positive. So I've actually never replayed a Heikin Ashi chart like this. We'll see if it does work. There are some limitations to replaying charts, and it's not perfect, but let's see if we get the expected behavior. Okay. Mike had commented, okay, there we go. So we just got one here. We just got the signal, but we didn't get the trade. So I wonder, we got the alert, we didn't get the trade. Oh, okay. You know what? I think I know why that is, right? Everybody, it's because we had that set to only, so the color background was happening immediately, but the signal wasn't happening until bar close, right, Gigi? So for those of you wondering why I was confused for a minute there, that was because the color background is occurring in real time, but the signal we didn't want to take until the bar closed, and that's why we got that behavior, okay? So that's actually worked as designed. All right. Now from here, we have the ability to also, you need to set auto trade on. I'm not sure what you mean by that, Skip. Did I miss something? Okay, so from here, yeah, you're right. Maybe my brackets didn't go out. So I'll have to figure out why that is. Maybe I missed something there. But if you do want to come in here and manually throw an order, you can still use oh, okay. I see what you mean. You can still use the trading mechanism. Okay, you can still use the trading mechanism while you're in replay mode. So as an example here, as this replays, like if I wanted to just manually go in and sell one, okay, I could do that. So even though you're in replay mode, you can trade along, with the market. Okay, you don't only have to use the system. You can still do whatever it is you want to do. So in this case, we got short one. There's the bracket. And then if we're lucky enough to see the market go lower, which it just did, it filled us, and that hypothetical bracket is gone. All right, so it is possible. There was a question related to that I missed a moment ago. You can still trade in replay mode outside of the system, but the system is still active. Okay. Mike had a question earlier about, like, what about the delay between the trigger and the execution? Like, what happens? Is there a lag between the two? The only thing that I can think of there, Mike, would be that you do want to address the overall lightweight nature of the ideal situation would be to have a lightweight environment, meaning you don't have like tons of third-party add-ons, you don't have lots and lots of stuff running, you don't have lots and lots of historical data. I could certainly see a situation where there's a delay between the time where you get into the trade versus when you or when the signal fires to, versus when you actually get into the position. There are things you could do to mitigate that, but we'd have to address them. Let me show you how. Okay, so we just got into another position here, but this chart seems to have stopped. I think maybe because I had the time set to possibly set to 3 p.m. So let me just flatten this one. Okay, I'm going to go back out of replay mode here. Oh yeah, you know what? This one's replaying. Let me bring that control panel back up and just stop the whole thing. Okay. One thing you could do, Mike, that you may want to consider, I mean, if you're feeling like things are hanging up a little bit, especially in like high volume circumstances, is there's this program that's running in the bottom right corner here of your system. It's called the Transact to Sierra Bridge. And what it does is this checkbox here of use mode 1, this means that we are going to push UDP data through to your charts rather than our default method of using what's called TCP data. So when you look at a trading dome is showing UDP feed. It's a UDP, and what that means for those of you who are unfamiliar is there's no error correction. It's very fast. On a dome, all you care about is the current price. You don't care about what happened, 200 milliseconds ago. You just care about what's happening now. So when you're using our program, your dome is using mode 1 feed. All right, now fast market situations can exacerbate uncontrollable network issues. So if there's 10 hops between you and us and the internet, or if you're in Australia or the UK or any place where there's several steps between you and us in terms of the network, TCP data might appear slower. So you can actually go into the bridge and check use mode 1. The downside to doing that is that you're more likely to see drop ticks. So a UDP feed is not error correcting. So if like something happened 100 milliseconds ago and we want to send an update to what happened, to correct it. That won't happen if you have use mode 1 selected, but you might find that the chart and the DOM are a little bit more aligned in a fast market situation. All right, I've got this checked just because I care a little bit more about speed than I do, accuracy. I'm not looking at like 89 tick charts, and I don't share the belief that if things are a little bit off that it's going to break my whole system. Some people really believe that. I don't. So I don't mind having use mode 1 selected. You may want to experiment with that just to see if it speeds up the feed and the processing of the entire thing. Okay, Mandeep, no, there's no way to do that. Elkin, no, the orders are held at the exchange level. So the orders themselves sit at the CME. Okay, it's only the logic that ties one order to the other that is held with your connection. So you do need to stay connected, but if you have a position on and the market rips lower, and even if your system is down, God forbid, even if ours is, that stop should still be hit because the order is actually sitting at the exchange level. It's not sitting on your computer or on our server. All right, so it is important to remain connected, but if you're in a situation where you lose your connection, you should definitely get in touch with us so we can help you manage your trade, but your stop and limit will still be working. Okay. Al, yes, I believe that could impact bid and ask data. Yes, mode 1 versus mode 2. Right. Okay, so another Al is asking about the data related to this replay. So what you can do up here, Al, is go to trade menu and select trade activity log. And the trade activity log is this window that looks like this. And what you would do is you would choose sim1, okay, like this, and you would choose sim all symbols, and it's going to show the trades. So if you're in trade simulation mode, like you're doing a replay, you'd want this to say sim and all symbols, or sim and just the symbol you're looking at. And then this drop down here should say sim1. If you're in your live account, it would just be your account number up here, and this would say non-sim, like that. Okay, so non-sim and then all accounts, or just your live account. But if you're in the replay mode, you'll have it set to sim, and you'll set the account here to sim1. All right. Yes, Richard, same thing with trailing stop. So the stop would stop trailing if you were to be disconnected. Correct. All right. Bill, it's a little bit advanced I don't know the answer to that, but that might be a question for Sierra directly. I believe, yeah. Milliseconds. I'm not sure that. I mean, I know they have millisecond timestamps, but I don't know. I really just don't know the answer to that. Okay. Okay, so this is the replay mode is something I don't mind showing. The reason I don't have lots of videos all over YouTube about the replay mode is that it's really easy for our clients to get trapped, so to speak, in replay mode. And we have enough customers who are really stuck in the simulator as it is. And I generally discourage the use of this with the exception of this function. So, looking at a replay and trading along with a market where you already know what happened that day, it's obviously counterproductive. Okay, it doesn't take a rocket scientist to tell you that. But replaying something like this just to see how things would have played out with the system, no problem with that at all. Just make sure that once you're done with the replay, that you go to trade simulation mode on and uncheck this option. Okay, so once you're done with the replay, go to the trade simulation mode on and uncheck the option. Hey, Brad, I do try to repeat most of the questions, when appropriate. Okay, so what I would like to do now is we only have a few minutes left, so I'd like to go to this. I know I've showed this a number of times before, but I would like to show an example of a chart that I do look at a lot, and I would like to show an example of an automated entry and also a situation where an extra filter could have prevented me from getting into a really, a potentially, devastating position, depending on, what side of the bed I woke up on that day. All right, so here's what I mean by that. I have a strategy that I like to track where when the market breaks through, it involves the CCI, which is this down here, and it involves a value area, which is this red line and then this green line. So the general concept of this idea is that the value area is the range at which the market has traded 70% of its volume. So at this moment in time where you see this blue arrow down here on the S&P chart on the left side, that 70% of the volume had traded between this price and this price. All right, that's what's called the value area. The concept here is that when the market breaks through its value area low, and the CCI reaches this negative 200 level, that represents a flurry of, represents two relatively rare things. Number one, the market breaking out of a range that it has spent a lot of time trading in between. At the same time, an oscillator like the CCI is reaching a level that usually is not sustained very long. So this is a reversion to the mean style strategy where oftentimes you'll see the market run back after, the other way after taking some heat. So this setup should look pretty familiar because we have the blue background, and then I've also got an arrow, which is really the same signal. And then we've got the blue dot, which is my trading system. So this I do run periodically. It's in a simulator, so it's not real trading, it's all testing. But this is something that I run throughout the day from time to time. And here's an example of the market breaking through that value area low. It triggers a signal, and then even if you had a relatively tight stop on this trade, which I really don't think you can do if you're trading this way, you had a potential to catch a really, really nice trade. Okay, that is a good example of how this trade was intended to function. Okay, the market breaks lower, there's rejection down here when the market tries to test that that unfamiliar range, and people see that as a buying opportunity, and they get everybody starts getting long. There's also a potential here for you being stopped out if you like to use a trailing stop, which I don't. So this is a situation where had this trade played out in real time, this is one of those where you can really catch a running trade. And if you're willing to give back some unrealized gain, which I think you have to be in order to win at this, that you might have had a chance to catch an awesome trade. All right. But if you look over at the NASDAQ, look at what happened here. Okay, this is earlier in the night, so it's not a great example, but look at this signal, this short signal here. This is potentially awful signal. You probably wouldn't have taken this because it's in the middle of the night, and I usually wouldn't look at this strategy that early. But if you look at the Dow here, here's one that you may have taken, and if you took this short and you were using a really wide stop, you would have definitely taken a significant hit, right? But there's a reason why this trade didn't fire. If you notice that I've got the red arrow and the red background, which are the same exact condition, but I don't have the short signal, which is that maroon dot. Why? All right, why don't we have that? The reason why is this. So I'm going to go to studies and show you. If we look at the sell signal, which is what the blue background is here, or the red background is. The red background sell signal is this. What this is basically saying is that the CCI needs to be greater than the upper CCI line, which is up here, and the current price has to cross the value area high from below. So there's two conditions here. One of them is the CCI being greater than the upper line itself, and then the second one is the closing price has to cross from below the value area high and therefore breach that level. That's why I call it the value area breach project. Okay, so that's what the signal is actually doing. But the trade, okay, down here, I added another study called Trading System Based on Alert Condition. Okay, I just renamed it Auto Sell, so it's easy for me to see. And if we go to the conditions here, there's also another requirement that I added after the fact, and that is that the current or closing price has to be 5 ticks above that value area high. Okay, otherwise the trade is not taken. Now, if just think this through. All right, when you look at this, you're thinking, well, wait a second, the market did get up there, but it may not have been there at the exact moment that this CCI was reaching above 200. Therefore, the signal never came through. And that is where little minute differences in how you have your system set up can really change the way that your day goes. So just kind of talking through this one more time, the auto sell is the same signal as what you see here, except it has this additional filter, which basically means that the market has to go 5 ticks beyond the value area high before the signal fires. So it's very possible that the market went up, hit that value area high, triggered this red background, and then the CCI came down below 200, and then the market went a few ticks higher. But not all the conditions are true at that moment. Okay, obviously there's a lot going on here. But this to me is a really good example of how when things are moving, you've got to be nimble enough to make adjustments. This is something, 5 ticks doesn't sound like a lot on the Dow. I actually originally put this idea in place on the NASDAQ where I was using 5 full points. So I actually needed to see the market go through the value area high by 20 ticks, all right, which in the NASDAQ is not that much. All right, and actually these studies are all linked by study, and it inadvertently applied the same condition to my Dow chart, but this is a good example of that practice working, which is basically saying, okay, the market is really volatile right now. Do I really want to take the position as soon as the market rips through that value area high, or should I give it a second? And the giving it a second, it's a trade-off. There will be times where you miss a great potential short because you are waiting for that extra room for the market to run, and it never does it. And the market goes lower and you miss the whole thing. But to me, it's always about avoiding risk of ruin. All right, risk of ruin is a lot more important than returns. You need to avoid the risk of ruin, and one way to do that is to operate with a slightly more defensive posture that requires you to be nimble from time to time. And to me, this is an example of how it might work in the real world. All right. Okay, so all the copies of the files here will definitely be available. If anybody has, I'm particularly interested in this type of charting and this chart. I am not here to make this presentation about me, but if anybody has ways or ideas that they think they may be able to improve this setup here, I think I've had a lot of inquiries about it, and I'm really interested in hearing feedback from everybody about this particular setup. So if this doesn't require you to purchase anything or buy any indicators, and we're not selling you anything. It's just something I like to do. I think there's some validity to it. And what I'm looking for, everybody, is I'm looking for ways to avoid bad, really awful entries where you get on the wrong side of an entry and the market runs the other way without you the whole day. That is what I'm trying to avoid. I have tried using the ticks, like the same concept as like a tick follow or a tick fade. I have tried a lot of different things. There's no perfect way to do it. I am certainly interested in the feedback that anybody might have about how to avoid these types of situations. One thing for those of you wondering, and this is a good example also about just how intuitive this really is. It's not just about the mechanics. Is a situation where, let's say that you are looking at these charts and all 4 of the value area lows down here get breached at the same time. Do you go long if all 4 of the markets are ripping lower concurrently, even though the trade says go long? No, you don't. And in fact, you could argue that it's a sell signal, and you could have a situation where you've got 4 blue arrows all pointing up here on each of these charts, and you're actually going short 1 Dow futures. Because that again, it's all very contextual. You have to look at the broader picture and say, okay, these, we're going into a new paradigm here with this value area low getting ripped like this on 4 different indexes at the same time. Especially lately, considering how disjointed these things have all been. So there are certain examples in this type of trading where you might find that something that looks like a buy signal really isn't, or maybe even it might even be a sell signal. That's why I don't just like to throw these charts out there and not talk about them first, okay? Because it's all about context, So copies of these files, if anybody wants a copy of the chart, just email your rep in our office. Before I leave today, I'm going to send them to all the Infinity guys and gals. Send them an email, tell them that you're looking for a copy of the file. We'll send everything to you along with instructions on how to import it and where to put it on your computer so you can access it. And next week, I think what we'll probably do is focus a little bit more on this particular setup. And if anybody has ideas, this time really do send your rep in our office, any ideas that you might have about trying to improve this particular strategy, because I think we could use it. We could all probably learn something from this, and we could share. This is a good community, and I want to keep it vibrant, and I want to keep everybody involved. So let's see if we can't figure out a way to try to improve some of these entries and make it work for everybody. All right. So if you want to copy the file, yeah, you're welcome to have it. All right. So I think that's where I will leave it for now, folks. I do appreciate you coming to the event today. I know I can't get to every question. Some of the questions are very good. They're advanced questions, and some of them are beyond me, and others, I might be able to answer, but no one else here would benefit. And I really want to, try to keep this as broad as we can. All right. So the archives, Al, are on our YouTube page. All right, just send me an email if you're interested in a link to that. I'll make sure to send them over. But this event will be recorded, or was recorded, and it'll be up on YouTube within a day or so. And you can use that in conjunction with the files themselves, and hopefully have some fun with it. All right. Okay, great stuff. Thanks everybody for your time. We appreciate it. We'll see you next time, and I'll read through some risk stuff, close up the room. We'll see you next Monday. Okay. Tell your buddies. Thank you, folks. Trading futures, options on futures, and retail off-exchange foreign currency transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. All right, folks, please send an email to your representative in our office if you'd like a copy of the files. Thank you.